Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today, futures were down, 7, 8 handles, maybe 6, 7 handles. Everyone was saying, oh, the fix was in, last week's rally wasn't real, don't trust it, it was on light volume, blah, blah, blah. You know what? If you took the trade and booked the money, they can't take it away from you. If you measured the action and you followed the technicals, it told you a different story. So the question is, what's today's story telling you? And after we've seen, a 55 handle move from that low on that Friday up to where we paused at 1409, I think today is pretty constructive. Markets are digesting the recent run. Some leaders are continuing to go, not even waiting for the market. So to me, that tells me you could still warrant a portfolio approach. You could still hold things longer than the way we did when we were tactical in a corrective phase, unless you were just short. So we take a quick look at the chart of the spiders. Let me show you something here. All right, first of all, here's your outside day. This was that day. This is the new day to trade against. That's that November 16th outside day. Here was your long entry down here on 135.18 if you were perfect. Even if you weren't perfect, you had a nice gap up. Here's your follow through. What did we do? We held higher. We held this gap. We held above the 200-day. You take even a closer look here just so you can really see what went on there. Commitment to the move. Then we inched up on Wednesday. Here was your Thursday, and then boom, some continuation on Friday. On this day, we also took back, another important moving average. I think we took back, what was this, about the 100-day moving average. So with that said, what was going to happen today? Were we going to fall apart? Were the bears going to start growling? Or were we going to see another inside day like we saw right here after the follow through on that Monday? So we saw some commitment, right? This gap continued to hold. We could have came back and even tested the moving average right here or filled a portion of the gap. You know what? We didn't. You could even put your trusty little Fibonacci retracements in here, which are right there to see, how to measure the strength and speed. Remember we said if we hold 25% area, there's strength and speed. And look at that, the 25% of Fibonacci right here held. Almost the same one that held here. This one was a little bit below. So anyway, this to me, if you measure it on a micro scan, shows you commitment. And within that commitment, obviously, there's always relative strength. You look real quickly at the cues, you'll see technology, which was lagging after this outside day, which was actually a little bit more potent even. You saw the same thing, gap up. You saw commitment higher, started to go. And then even today, look at technology. It actually traded above Friday's high today already, showing you that people weren't waiting, that we could see an upper area here where you have 65.46, and then who knows, maybe even into this 66 area before all said and done. Then you go to some of our some of the leaders, some of the stocks that we've been watching and trailing and long in the virtual trade floor. You have Apple. Apple had that major capitulation day, the Red Dog reversal 522, and from there you had some nice entries. Okay, you saw some continuation. Here is your Red Dog reversal. There's your follow through. And then look at this. I showed you the indices that were holding by the bottom end. This was holding the top third, showing you strength, showing you power, showing you can continue. Then here was your move on Friday, right? This was Friday, 11 points or so, right back to that pivot, which was 572. I think that's what we had on our price point sheet. And then pow, another day of follow through. I actually sold my Apple. I was naked Apple for a good 10 minutes. And then just for full disclosure, I did buy back a little bit at the end of the day just to be involved. I've been, swing trading, trying to keep it involved. I'm like 522 to, 588. That's a big trade. I was just happy that I stayed with something that long. But it really gave me no clues to, to sell. Maybe, it's extended a little, you could trim and trail. But at this point, I did go along a little bit. It went out well. I like the way the market acted. So it's still in my virtual trade floor. It's back. And I do think the next objective here, if you take a look at the chart, is 598. Okay, and then we'll see what happens there at the 200-day. Another high beta name acting actually healthier is your Amazon. Amazon actually took back both 200 days, depending which one you use. If you use the SMA or the EMA, took back both, and that's why this one's already back near resistance. Took back also the 50-day and closed near its highs. So showed you relative strength for high beta land. So this looked good. eBay also new highs. This I think is important. I'm not long it, but I will say, you follow the rules of these big gap ups. Okay, here's your gap up, and then just turned into a methodical consolidation into another earnings gap up. here you go. And then the last time earnings were decent, and it's still, this one held above both 200, both 200-day moving averages, held the 100-day, and it's one of the first leaders to actually make highs. So it's just interesting to see that they're letting a leader that's been leading all year make new 52-week highs. If you're a stock picker, congratulations. You are doing pretty darn well since 2009 all the way up. Anyway, just for, we talk about the condition of the market and the health of a market. If you remember back in October, anything that tried to, or a lot of things that tried to break out to new highs, broke out and failed, and they used it for distribution. So this is telling me, again, we can continue higher in the market, continue trading around your positions. When you get extended like we were Friday, I got a very short out there, and so I actually made money on that, covered some, and got more neutralized with my, I think I have 5-6 longs versus a short, but my short is a lot less because we burned off a little bit of that overbought nature. All right, as far as Google, not acting as well. So keep that in mind if you're trading it. I don't know exactly what's going on here or what's wrong with it. It's not like, game over or take it off the list. But it's holding around here. You saw some power in Amazon, some power in Apple. Right here, not much power. For Google to get going at all, I guess it's going to have to start getting above this 670 for right now. It's kind of just out of play. And then there's Facebook. Facebook, we've been talking about it since last week. I've been really focusing on this one. I've tweeted about it many times. And here you go. This was, I remember I was leaving for the West Coast. This is when all the shares got loose and everyone said it was going to break 20 and go to 15. I think that's what Barron said a few months ago when I got caught in it right here. But anyway, it ignited forward, had some follow through, and then what did it do? What I always say is important. It held higher. Here's a big channel here, guys, and what got me really excited was, I wasn't in it really. I actually day trade, that day for like 80, 90 cents, and I thought it was pretty cool on my way to the airport to make 2-3%. But anyway, this was when, I started to watch it closely. This is when I added to it, and then here was a nice trade into the gap. Kind of failed here on Friday, but then pow. So closed near the highs. To me, it looks like it can continue. You want to take a look at the volume here. The volume, we've had some nice volume spikes. I talked about it on Bloomberg today. Here is a volume spike. Here's a volume spike. Here's a volume spike. Look at the volume today. So, there is some volume there. Some institutions are getting involved. Again, this is where it was, 45. Tried here around 30. Now you have a nice lower level channel. Here was your holding higher. If you didn't get involved on this day, now it looks like you could trim and trail it and see what happens there moving forward. As far as some of the banks, they've started off weak. I wasn't really sure why they were so weak, and then they got some footing. I will say that XLF still looks pretty good, right? XLF holding higher, held above both the 200-day moving averages, coming into some resistance. Goldman Sachs made a higher high today for a bank, which I think is something to take notice. Above the moving averages once again, went above Friday's high, which a lot of banks didn't. I still love the chart pattern here of Bank of America. It's trying to consolidate up here near the highs, holding higher, just like Facebook. If this thing could hold higher for the next few sessions, I don't know how many sessions it's going to take. It's above all the moving averages. I do think we're going to get a nice meaty trade through 990 and through what's this 997, and then you go to your weekly chart and you will see beautiful here, beautiful weekly chart. Could give you 1144 quick, maybe even above that. So keep Bank of America. I told you to put it in the drawer, keep that shut. And if you don't look at it, you won't get so bored with it because it's pretty boring. It has to be one of your positions. It can't be something you just trade a back and forth. As far as silver, I like the way silver and gold held in there. This is your chart on silver. You could see, I guess you could, let's see this downtrend. Did it break? Yeah, it actually broke above this downtrend already right here. This was at ignition in August, broke above, came back, retested. Looks good. You go to your daily chart. Nice little inside day, right? This is when I bought it this day. Here's your opportunity still on Friday, inside day. It looks to me like there's continuation there above all the moving averages showing relative strength. GLD. Somewhat similar. Here's your symmetrical triangle, broke above, nice inside day. Don't know how many you're going to need, but typically you have a few here. So we'll see. I'm staying with my silver. I didn't play gold, but maybe if gold breaks out and I'm in my seat, I will be buying this thing above 170 for continuation. And then, people are talking about RIM and how it's back above 1112, but again, we looked at that off the charts at 8.5. I think maybe it could go higher, but it's something that doesn't interest me. Yahoo is upgraded today. We talked about this thing here, around 1660, that was your entry. I don't want to really see you start chasing it up here around 1875, but it's, it's okay. You go to your weekly chart, and your weekly chart does look decent, okay? As far as this bigger channel, I was talking about this micro channel in here, and now here's your macro channel, but it just got there, so it might need some time before it could trade through. This could be a good 2013 play. It definitely looks as if it has the institutions behind it now. So let me just remove some of this volume here, just to make it look a little cleaner. RTHs, okay. It's okay. Yeah, well, RTHs actually look pretty good. A little triangle here too for a little point of reference. If it could start breaking above this, it could probably go again. Holding higher, this is your daily chart. Descending in nature, we like that, can go. MOO, someone pointed it out today, and the ags are holding in there pretty well too, right? You have a descending little channel here, defined resistance that people could be trading against. It's actually trying to poke its head above it now. So pick out your favorite ags. Typically Monsanto seems to be acting well, which, wow, look at that move back to the highs. Let's see what CF's doing. Not as strong this time around, but a little sideways action. You could see a move above 210-ish. Let's see, AGU, what are you doing, buddy? Oh, nice and tight. AGU, this is something that we might be able to put on the radar, right? Here is your gap up, held sideways above this little pivot flag. Could see somewhat of a gap fill here. So that's something to put on the radar if the ags get going again. So all in all, it's just been a long day. I know everyone's probably ready to call it quits, including me, after a long weekend. I have to say today's action is conducive for higher prices. We might get some crazy fiscal cliff news or something out of Greece, who knows. All I have to say is that last week we measured Friday's reversal, got flying colors, right? Monday follow through, Tuesday, Wednesday digestion, Friday continuation. Coming into this week, a new week. Open down, wasn't a gap and go to the downside. It was a down open where you could have made some money on your hedges, traded averse the gap, played some leaders for action like Apple, Amazon, eBay, Facebook, you name it, and continued to watch some bases build for potential new entries as these levels build. So all in all, constructive, conducive, hopefully making some money. See you tomorrow with Brittany. Have a good night.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.